Welcome to the All Financial Hour podcast with Steve All.
When it comes to planning for retirement, you got to have the right attitude, right? You got to be positive. You got to come in eager to work. And your mental state, I get it can be overwhelming, but that's where you come in, Steve.
And I look at it to this, that in that same thing. I will be honest to say that I'm not doing 29029 by myself. I'm talking to the people that have done it before. Make sure you train this way. Make sure you train that. I'm drawing on their experience to help. And that's what I believe our job when it comes to walking people in and through retirement. We are not just investment advisors. We're not going to come in and talk about just a rate of return. We're going to look at the things that make up your retirement. An income plan. How are you going to replace that paycheck once you get there? When do you take Social Security? What's the optimum time to do that? What about the risk reward that you are taking? Mm-hmm. My philosophy around that is I want the best return that I can possibly get with the least amount of risk possible. And then taxes. I get too many people that walk into the office and they say, well, I got questions about taxes because when I ask my guy about it, they won't even talk about it. And to me, reducing or eliminating taxes in retirement is the greatest thing that you can do for your retirement. So those things that a lot of people don't talk about are what I believe a comprehensive retirement plan and what financial planning is really all about. It's not just about rate of return. Don't worry about the withdrawals. We'll make enough money and you can go ahead and do it. And then the last thing that most people don't think of, how am I going to pass these assets to my heirs? Those are the most important things that when we're looking at, and that's where I believe the things are the same. I've got coaches to help me through this. I am the coach for a lot of people because I've not walked through retirement, but I've walked a lot of people through it. I'd love that opportunity to help you walk through those retirement years.
You know, the 2024 stock market has produced an indicator that could prove positive for the rest of the year. Since 1957, the stock market has been up 10% in the first 100 days of the year 18 times. But when this happens, it continues to climb and averages about 24% by the end of the year. There are so many different factors that we deal with today than in the past, of course. So can we really rely on these historic trends to be accurate, Steve?
Well, as it's always put, trends are trends. There's always exceptions to every rule. So we have to look at it is if we're only going to invest with one thought process. Markets are always going to go up. That's not going to happen. That's an unrealistic expectation. The only guarantee that we're allowed to give is the market's going to do one of three things. It's going to go up, it's going to go down, or it's going to stay the same. And the idea that I look at it for people when they come in and sit down and talk with us is how can I get as much of the emotions out of investments that's possible? Because the three big questions when people come in and sit down, one, should I be holding on to what I have or should I sell it? Those are usually the first two questions. Should we hold or should we sell? Then the other question is the people that will come in and say, hey, Steve, I didn't like the signs of the market earlier, and now I'm sitting in cash. When's the best time to get back in? So that's the third one. When to buy, when to sell, and when to hold. So we got those three things, and that's what I love about Brad Jenkins and MarketGuard, is that proprietary investment methodology that uses mathematical, non-emotional investments to use the models to take as much of the emotions out as possible. And I used to have it where we were very good in a defensive mode. Mm-hmm. But with Brad, I can take that person that's an aggressive investor and I can be aggressive with them. And I can also bring you guys in that are more conservative by nature. And asset protection is the most important thing. We have models that do that. I have static models that adjust for drift. If an 80-20 model and the markets go up, you don't have an 80-20 anymore. You got a 90-10. Let's bring it back to the 80-20. If markets are down, you don't have an 80-20 anymore. You got a 70-30. That static adjusts for drifts. Our target models will actually move away from markets when there's headwinds. A lot of those are not fully invested right now. Why? Do you think we might have some headwinds around there? We've got a presidential election that just changed again. We've got the problems over in Israel, Russia, Federal Reserve, interest rates, and inflation. So we've got some headwinds right now that we're not sure exactly which way they're going to go. But the idea is if we can remove as much of those emotions as possible, because it's usually those emotional decisions that cost us the most when we make an emotional decision. So if you'd like to take the emotions out of those most important aspects, when to sell, when to hold, and if you've sold, when to buy, call now. Ask about Market Guard.
The Summer Olympics are underway in Paris. And here's a question that's been Googled a lot. Do American athletes pay taxes on the medals and all the cash awards that they win? The answer was yes, until a 2016 law changed that. But hold on just a second. Of course, there's a catch. If the athlete's total yearly income surpasses $1 million, that's easy to do, by the way, with endorsements, then the money value of the medals and cash counts towards their tax bill. It's kind of like taxes in retirement, right? You have to take into account all forms of income. So what can that include, and how can you come up with a workable plan to help us mitigate taxes, Steve?
Well, when you look at taxes, we have the most complex tax system in the world. It's like, are your metals taxable? Well, it all depends on how much you make. How much do you hear about that with other things? So let's just kind of go through. All of these things are taxed differently. Social Security is taxed differently. What if you have interest coming from your CDs or a money market account? Differently. Mm-hmm. The sales of stocks, bonds, and mutual funds depends on how long you sold it. Dividends. Is it a qualified dividend or a non-qualified dividend? They're both taxed differently. Traditional IRAs and 401ks fall in the same category, so they are taxed exactly alike. Roth IRAs, no tax on that for growth after 5 years and past age 59 and a half. Annuities depends on whether it's a non-qualified or it's an IRA account. Your sale of your home. The sale of your home is taxed differently depending on how much the gains are. So we went through what looks like 8 or 9 different things, and almost every one of them are taxed differently. Mm-hmm. As I said, we have the most complex tax system in the world. It depends on where you're at, on how much you have to pay for capital gains. So having somebody that has an idea what's going on in the tax environment is very, very important, because you will hear me say it over and over and over again. Eliminating or reducing taxes in retirement is the greatest thing you could do for your retirement plan. So the question I have, if your guy won't talk to you about taxes, he tells you you need to go someplace else, give me a call. Ask for that tax analysis. Let's sit down and see if tax planning can make benefits for you. Because I look at it to the fact paying taxes is never a thing anybody wants to do. But I'd rather pay taxes of what I would prefer to pay them at than what Uncle Sam might decide that you need to pay them at in the future. Give us a call now. Ask for that tax analysis.
The fear of running out of money is so real that a lot of retirees, they don't spend and maybe don't even enjoy their retirement like they could or they should. So when asked how often do you withdraw funds from your retirement accounts, 52% answered only when needed. You got another 30% that said never, and 16% answered systematically or regularly. So how do we rid these retirees from being scared to spend their hard-earned cash?
That's probably one of the things that we deal with the most, is how do we take income out and balance that fear of running out of money with what's going on. I usually put it when I have clients that are maybe a little bit skeptical. There's a couple things that I don't like hearing when the children have to come in and mom and dad have passed away. One of the hardest things to hear is, God, I can't believe mom and dad had this much money. Why didn't they do more when they were alive? Mm-hmm. So my idea is to say, hey, what are your wishes, hopes, and dreams, and what are the things that you want to do? Well, Lori and Jack had came in. Jack was very conservative. He just didn't want to spend it. Lori says, we've got the money. Let's go ahead and do some of these things. And I did mention the idea of, hey, I don't want the kids coming in and saying, why didn't mom and dad do more? So we just sit down with them. We can do it for you. We can do it for anybody. We start to look at it and say, what if we put an extra $1,000 a month into your account? Would you be comfortable spending it then? Because most people look at their checking account to figure out what they can or cannot do. They forget the fact that they got all these other assets that they saved all their life for. Mm-hmm. So when we sit down, you could be in that situation. If you were comfortable enough and we ran the plan and you knew everything was going to be fine, what if we put an extra $1,000? $1,500, whatever it takes for you to do the things that you'd really like to do in retirement? Would that make it easier? So that's when we sit down. If you're one of those people that say, I don't want to be a burden to my family and I don't want to run out of money, come in. Let's do a full comprehensive retirement plan. So we can say, what are your percentages of having a successful retirement? And then we can look at it and say, what if we spent a little bit extra? How would it affect you? Give us a call now. Ask for that comprehensive retirement plan.
Thanks for listening to the All Financial Hour podcast.
Insurance products are offered through the insurance business All Insurance Group, LLC, AIG. All Financial Group, LLC is an investment advisory practice that offers products and services through Impact Partnership Wealth, LLC, IPW, a registered investment advisor. IPW does not offer insurance products. The insurance products offered by All Insurance Group, LLC, AIG are not subject to investment advisor requirements. IPW and All Insurance Group, LLC, AIG are not affiliated companies. Investing involves risk, including the potential loss of principal. Any references to protection, safety, or lifetime income generally refer to fixed insurance products, never securities or investments. Insurance guarantees are backed by the financial strength and claims-paying abilities of the issuing carrier. This radio show is intended for informational purposes only. It is not intended to be used as the sole basis for financial decisions, nor should it be construed as advice designed to meet the particular needs of an individual's situation. All Financial Group, LLC is not permitted to offer, and no statement made during this show shall constitute tax or legal advice. Our firm is not affiliated with or endorsed by the U.S. government or any governmental agency. The information and opinions contained herein provided by third parties have been obtained from sources believed to be reliable, but accuracy and completeness cannot be guaranteed by All Financial Group, LLC.
This radio show is intended for information purposes only.